In case you missed it, KRA issued a warning to all businesses against filing nil returns, and there's going to be consequences for this. So as usual, whenever you miss filing your returns, there's usually penalties associated with this. So this year is going to be a bit bloody for the sole reason also that we are doing a transition to iTax. But outside of that, today I'll be touching on a number of items, one of them being invoices. So if you still issue the normal handwritten invoices or the ones that you design on Canva, KRA will no longer be accepting this anymore. Quick one before I go any further. This video is for anybody who runs a business in Kenya. If you have a KRA PIN and if you buy goods from suppliers or sell to customers, if you're a service provider, a consultant, or a freelancer, this video is for you. So stay tuned to the end. As we all know, so long as you transact within the boundaries of Kenya, so be it cash or m-pesa or banks, KRA will want visibility of this for the sole purpose of taxes. So if you run a business, this is something very familiar. iTax, it's the electronic tax invoice management system. And this is how all businesses are expected to transact within the country. So there was a public notice that was issued late last year. And what they mentioned is starting January 2026, KRA will begin validating income and expenses in both individual and non-individual income tax returns against the following data sources. So if you want to read the whole thing, you can just pause here. But simply put, they're going to be tightening the rules this 2026. And this change creates three big problems for your business. One being, you end up paying taxes on money you already spent. So ideally how tax works is you make money, or what we call income, you spend money running the business, so this is what we call expenses, and you only pay tax on what is left, or what we call profit. Let me use an example, yeah? So assuming our business, we can call it company A, they've made revenue, or what we call total income, of 1 million shillings in the year 2025. So they incurred some expenses, so it could be paying rent, it could be paying salaries and the likes, and this came to 700,000 Kenyan shillings. So it means their gross profit is 300,000 Kenyan shillings. So it's total income minus costs incurred to get 300,000 Kenyan shillings. And when it comes to tax, you're expected to pay 30% on profit. So that's 30% of 300,000, which is 90,000 Kenyan shillings. So it means your net profit is going to be 210,000 Kenyan shillings. So this translates to 21% net profit margin, which is computed as your net profit by revenue times 100, which gives you 21%. So to simply explain it, for every 100 shillings you make, you keep 21 shillings after everyone else is paid, so including the government, yeah? Which leads us to something a bit sensitive here, allowable expenses versus non-allowable expenses. I'll use a table to explain this. So allowable expenses, so these are costs incurred directly by the business. It could be paying for rent, salaries, electricity, etc. And these are more or less classified as deductions that can lower your taxes. There's also what we call non-allowable expenses. So these are personal expenses incurred. It could be personal gifts. Maybe you bought a nice watch. It could be you took a vacation, and majorly there's no valid iTax receipts or invoices associated with these costs. So these are non-deductions, and KRA adds this back to your profit. And I'll show you that in a moment. And the principle behind this is allowable expenses are costs wholly and exclusively incurred to generate income. So this is a principle used by KRA, and you're going to see it a lot, especially when you get to interact with accountants and KRA officials themselves. And here I have a nice table that is going to demonstrate two businesses. So we have business A to the left and business B to the right. And I'll run you through what a clean business looks like. And in the event you mix your personal expenses with your business expenses, I'll also run you through that scenario. So we can start with business A. So business A made revenue of 1,000,000 shillings. So this is the total income they got. Allowable expenses, or expenses that have a valid iTax invoice or receipt, all added up to about 700,000 Kenyan shillings. Assuming this business made no mistakes, to mean they did not incur any personal expenses against the business, it means the taxable profit is going to be 300,000 Kenyan shillings. Of course, there's something I have not touched on here, like the withholding tax, but I'll keep it simple for this explanation. So it means they're going to pay 30% on profit, which is going to be 90,000, and they're left with 210,000 Kenyan shillings as their bottom line figure. So we can go to a business B, which has a mixture of personal and business expenses. So same numbers. So business B made an income of 1,000,000 shillings, and they incurred a total of 700,000 Kenyan shillings. So in this case, there's 500,000 Kenyan shillings with valid iTax invoices, and there's 200,000 Kenyan shillings with no valid iTax invoices. So what does this mean? KRA will disallow this expense, and they're going to bump it up to the taxable profit. So that's why you're going to see our taxable profit is going to be 500,000 Kenyan shillings now. And 30% of this is going to be 150,000 Kenyan shillings. So this means you're paying an extra tax of 60,000 just because of mixing your expenses in this case. And at the end of the day, it means your net profit margin is also going to be way less than business A, which kept the books very, very clean. And it leads to problem number 2. Big companies stop paying you. So any big company, hospital, school, government office today, they expect you to submit an iTax invoice. And if you don't have such, it means that's lost business on your end. Then problem number 3, old fines you forgot about are getting bigger by the day and by the month. So how this works is most people just file their returns and you never check your KRA portal from there. And what happens is maybe you got a fine and this is going to accrue interest, which more or less will cause bigger problems down the road. And KRA is going to consider you as a non-compliant business. This means they're going to invalidate your tax compliance certificate, which is a document that validates your compliance status. So no tax compliance certificate means you can no longer bid for tenders. It means the bank will say no to your loans. It also means that the big corporates that you thought you're going to sign are going to walk away for the sole reason of not having a tax compliance certificate. And this happens to businesses every single day. So 3 things to do today. Number 1, sign up on iTax. It's a very easy process. Check your tax compliance certificate in your iTax portal. A very easy process once again. And the most critical one is separate your personal and business expenses. And there's a video I'll link in the description if you want to know how to sign up on iTax via eCitizen. So if you do all 3 this week, you're ahead of most Kenyan businesses, but some gaps are still left. 2 months go by, you paid 20 plus suppliers, you forwarded 40 plus receipts through WhatsApp. Some of them are iTax compliant, some are not. And in this case, if your books are not in order, it means there's going to be a very huge gap of you keeping track of all these accumulated receipts and invoices. And I know what you're thinking, Mike, these accounting websites are a big headache and you probably don't have time for that because you're focused on the business. And it's for that reason I built Thuita Finance, so that I get to eliminate this stress for you as the business owner. And what does Thuita Finance do for you? So it lives in WhatsApp and does the hard work for you. And the beauty of it is there's no new apps you need to install because it's the same WhatsApp that you use to chat with your friends and family that you get to use to log your income and expenses. So it's as simple as just take a photo of a receipt or forward an m-pesa message and forget. From there, everything is going to be handled on your behalf. It's going to extract all the details from your receipts and categorize them for you automatically. Thuita Finance is also your KRA shield because for every receipt you send over, we're going to check if it's a safe or risky receipt. So whenever you send over a receipt, we're going to cross-reference against the KRA database and tell you if it's a safe expense or not. The other one is bank-ready statements in one click. So every single receipt or invoice you get to send over, we're going to generate PDF statements that are going to be sent to you on a monthly basis. And it means in the event you need to submit your statements to any banking institution, your books are always going to be clean. And a big one is knowing your real profit. So you stop guessing, because every single day we're going to check your income versus expenses and tell you where exactly your profit is at. Just recently, KRA launched a WhatsApp bot called Shuru, which helps in filing of taxes among other services. And this is enough validation that all these things can actually happen within WhatsApp. So what this means is Thuita Finance is going to be your accountant or personal CFO. It's going to ensure that your books are in order. And when it comes to the point you're meeting the taxman, it means it's going to be a very seamless process. And here is a video on Shuru, which we can check out.
It then asks for national ID number and KRA PIN number. It has a second layer of verification through one-time password (OTP) sent to the taxpayer's mobile phone number that's input to verify the pre-filed data on KRA's end. Kenyans who spoke to NTV equally questioned their data security even as the platform goes live.
First of all, the system that is there, the old one, iko shrubbed. Mtu anaweza kuingia. So wakifanya hivi itabidi watakuwa na details zako already. Na ukishakuwa details zako watakuwa expose. So somebody entering into your whatever it is.
What? Bro, what are you talking about, man?
So easy to, you might even say he's a KRA person. So I think.
So looking forward to seeing the improvements KRA is going to roll out in the coming months. And finally, to close this off, so we are currently running a private beta, or what we call a closed testing, with a select number of users. So we are more or less validating everything before we get to do the full rollout. So stay tuned for the next episode.